Hey guys, welcome back to the channel, and today we're going to be reacting to
Why the US economy is doing surprisingly well.
Came to office, there was a widespread anxiety that his economic program of tariffs and tax cuts would be bad for the American economy. Economists warned that his tariffs would push up inflation and slow down the economy, while his tax cuts would make the American tax system even more aggressive, while putting a potentially lethal strain on America's public finances. However, while there was some turmoil early on, in recent months the American economy seems to have stabilized and has actually been looking pretty strong, at least by international standards. So in this video, we're going to try our best to explain how the American economy apparently dodged disaster, and whether it can last. Too Long. We dived power. You got more about Too Long, the end of the American order, by clicking the link in the description. So let's start with a quick recap. Last year, there was a genuine sense of optimism among much of America's business community that Trump's promised agenda of tax cuts and deregulation would be good for the American economy. Trump had inherited a pretty strong economy from Biden, with the strongest GDP, productivity, and wage growth in the G7, and investors dismissed Trump's talk of massive tariffs as campaign bluster, betting that, like in his first term, Trump would be sensitive to market pressures, which would essentially prevent him from doing anything too unorthodox. This is why ahead of Trump's inauguration, the dollar surged, with both the S&P 500, an index of the 500 leading companies listed on the US stock exchange, and the dollar index, which measures the value of the dollar against a weighted basket of currencies, rising after Trump's victory on November 5th. However, once Trump actually came to office, it quickly became clear that this optimism was misplaced. On day one, Trump started whacking tariffs on his trading partners, and it quickly became clear that Trump was genuinely committed to his tariff agenda, and less sensitive to market pressures than in his first term, with both the president and senior members of his team dismissing the declines in the S&P 500 as merely noise. Similarly, it quickly became apparent that DOGE, the main vehicle for Trump's deregulatory agenda, was both less effective than expected and also more focused on filling the civil service with Trump loyalists than actually cutting federal spending or red tape. The economy duly started showing signs of strain in March, when survey data suggested that both business and consumer confidence had plummeted, and that the Atlanta Fed's GDP Now forecast, a real-time estimate of GDP, suddenly started predicting a vicious recession. But things got particularly dicey on April 2nd, when, as you might remember, Trump declared Liberation Day and announced a flat 10% tariff on all imports coming into the US, as well as further flat tariffs on basically all of America's trading partners, calculated spuriously by dividing each country's bilateral trade deficit with the US against its total exports to give a percentage, which Trump then halved if he felt like it. This sparked a steep
what it means now, like after the period has ended.
Yeah, they still, I don't know, he's still messing around with those tariffs. I got the notification today, oh, he's threatening Europe to put 30% on Europe, and I don't know, it's still playing the game. I feel like tariffs aren't really enforced yet. I feel like he's just still throwing the numbers around. I don't know what he's doing with that.
Decline in the S&P 500, which fell by about 10% in a week, as well as a furious tit-for-tat trade war with China, and by mid-April, both countries had imposed tariffs over 100% on each other, basically ending all trade between the world's two largest economies. However, in the past couple of weeks, the American economy has apparently regained its footing. The S&P 500 is back up to a record high. Inflation has only come in a smidge above the Federal Reserve's 2% target for the past 3 months, and the odds of recession have now fallen dramatically, with both the IMF and OECD now forecasting that America will once again see the strongest growth in the G7 this year. And while the dollar has still trended downwards, it's above the recent historical average, and while Treasury yields have tended upwards, they're still within the normal range for the past couple of years. Most recently, last month's jobs report massively outperformed expectations, with 147,000 new jobs added in June, while other recent survey data suggests that business and consumer confidence is recovering. So what actually happened here? How has the US economy apparently survived Trump's tariffs, which economists almost unanimously expected to trigger economic disaster? Well, the first thing to say is that it's important not to overstate all of this. Sure, the American economy isn't headed for a recession, but its growth rate has slowed from between 2 and 3% to somewhere between 1 and 2%. It's also worth saying that inflation is still higher than the Fed's target, and it's expected to rise to nearer 3% in the coming months. Some of this is also the consequence of Trump's constant flip-flopping on tariffs, which has meant that his most dramatic tariffs have either not come into effect, as was the case with his proposed Liberation Day tariffs on the EU, or has been wound down somewhat, as has been the case with its tariffs on China. To be clear, America's tariff rate is still pretty high by historical standards. The effective tariff rate currently stands at about 12%, according to calculations by the Tax Foundation, its highest in nearly a century. But the potential inflationary effects of this have also been offset by businesses who have tried to keep prices flat even if they've been affected by these tariffs. This is also because of front-loading, i.e. businesses stockpiling imports ahead of the tariffs, but also because even if they've exhausted these front-loaded stockpiles, businesses have so far been happy to accept lower profits rather than increasing prices, because they don't want to irritate customers when there's a good chance that Trump will
Out there
revert.
though? Have they?
Mm.
I don't know. And how does he know?
A lot of information being thrown, and I don't know
Yeah, I
where
don't
he
know
gets
if
his
the
evidence
yeah,
from.
I don't know if the businesses have been because the costs have been going up. Like of the stuff like at Costco when we see like I see stuff going up. I don't know if the businesses are really like offsetting the cost, like eating up the deficits themselves. Like, of course, there's always gonna be outliers that will do that, you know. But those are usually like small businesses or the businesses with like mad high margins. I think your regular Walmarts, Amazons, Costco, I don't think they're gonna eat that up. I think they're just gonna relay it down to us. I'm kind of
Mm.
reluctant to believe that what he's saying.
Plus his tariffs later. It's also worth mentioning that quite a lot of this nominal growth is driven by debt-funded government spending. Thanks in large part to Trump's One Big Beautiful Bill, the US is expected to run a budget deficit representing between 6 and 7% of GDP for the foreseeable future. The relationship here isn't straightforward. It's not like a 6% deficit automatically adds 6% to GDP, but a deficit of this size will still create a pretty big boost to aggregate GDP, especially because much of the fiscal stimulus in the Big Beautiful Bill is front-loaded over the next year or two. And while Treasury yields aren't high enough to trigger an acute fiscal crisis in the near term, America's fiscal situation is still clearly unsustainable. But the final reason that the US continues to do all right is that, well, there just aren't that many better options out there. This is why American bonds, stocks, and the dollar are still
Oh.
doing okay. Whatever anxieties investors might have about Trump and his agenda, there aren't that many obvious alternatives. Europe is looking at
I
even
can
slower
see
growth.
that because everyone is struggling at the same time. So it's like there's nothing an alternative that's better or safer per se.
Also, to be fair, I feel like there was a lot of like doom and gloom when Trump first came in. A lot of people wanted Trump to fail, so they were very negative in the predictions. Oh, he's gonna fail.
Mm.
He's gonna fail. That's not happening.
Mm.
So it's kind of like okay, he's not failing. Clearly, life got to go on. So I think there's a little bit of that going on. Cause even like with this channel right now, we're seeing it, but I'm sensing like they're kind of like the title is, oh, why America is doing surprisingly well, but what he's trying to say is kind of, oh, they're not that well. It's like,
Mm.
and to be fair, I do agree we're not like that well. I don't think
Mm.
things are great,
Yeah.
but you
We
know,
were looking at the GDP around the world.
yeah. And you know, like we were here reacting 3 months ago, 4 months ago when the tariffs were happening and what was going on around. Like we were, to be fair, I did think things would be way worse than they are. So I guess the
Mm.
bar is really
Yeah.
low, and you look at
Plus,
that low bar, you kind of
we
okay, it's not
thought
that bad.
we thought there was not gonna be food
Yeah, like we thought it would be like
like
COVID type
COVID times.
shortages. Yeah,
Yeah.
nothing. To be fair, like nothing really changed. So
Mm.
like the prices have gone up, yes, but that was expected, and prices always go up. So it's like eggs
Mm.
have come down. That's nice because that in before Trump got elected, eggs were like about five a dozen. Now I think it's like three something a dozen. So,
Mm.
no, that's like a big change. Aside from that, it's stuff went up like 20 cents, 30 cents each, which is adds up over time, but it's not like
Mm.
oh my god, life changing. At the same time, we're not like really heavily dependent on any like Chinese goods either. We're not buying no new TVs, we're not buying no toys, no like new electronics or stuff
Mm.
like that. So
I think we'll see something interesting when the holidays come in,
yeah, maybe like when
like Black Friday
yeah,
and
when people
Christmas
start to
shopping.
buying like that type of stuff more, it might be more
Mm.
effect. But right now, people buying groceries, and you know, groceries are
Yeah.
American product for the most part. Of
Overall, summer is usually the slowest in terms
yeah,
of like sales.
summer is a slow period. People are on vacation. The good
Yeah.
weather is good. People are outside, so it's like it's kind of yeah. Summer is not the time to really like judge a because overall
Mm.
consumer spending is down in the summer year
Mm.
over year. So this is
Now wait
nothing
till
shocking.
like the kids go back to
Yeah,
school.
like the back to school shopping.
Mm.
Okay, that might affect. Yeah.
In the US, and no national bond market is as deep or liquid as the Treasury market. The CCP's penchant for capital controls means that China isn't the most attractive place for foreign investment either, and other emerging market economies are struggling to deal with turmoil triggered by Trump's tariffs. So, without a clear alternative, America's economy will continue to benefit from its status as the go-to haven for foreign capital. This is a complex and nuanced.
So it seems it's just America is too big to fail. That's what it is. Everybody is too dependent on America. They can't really. They're more.
Mm.
They're more messed up than America is by American policies.
Mm.
Interesting.
I think that the scary fact is when you know that.
I think Trump knows that. He always knew that. That's why he was the big bad wolf. He really did like. Whereas Biden, he was kind of like trying like beat around the bush, be more polite. With others, Trump was like, "Oh no, y'all need me. Y'all need us. So I'm gonna do whatever I want,
Can I
and
see
y'all
the
gonna
comments?
adjust." And so far, seems like it's okay. I mean, at least okay based on what we were expecting, because the expectations was definitely worse than we are getting. He dodged disaster by delaying most of his tariffs. That's not dodging the disaster. Well, I do feel like the tariffs was just a negotiation tactic. I don't think like he genuinely expected to add like 100% tariffs on China. That's just ridiculous. I think those numbers were thrown around like in a kindergarten because to negotiate. That's his just tactic. His negotiations is like very like brutal and like very rough. Like he doesn't beat around the bush. That's just how he is. This reminds me of all those periods where we talk about how Russia's kind of was also doing surprisingly despite all wartime sanctions stuff. A lot of the time, people are surprised because they expect consequences that are instantaneous and too extreme. And when things don't play out quickly or that extreme, they push it surprisingly well. I mean, that is true. As I said,
Yeah.
the bar is so low
Low.
that right now we're looking here. Okay, it's not as bad as I thought it would
Yeah.
be.
Okay. Guys, of course, let us know your thoughts. Don't forget to like, comment, and subscribe. Join in Discord. And as always, share as much kindness as possible.